All right, guys. So, risk management. What is it? How does it work? Why is it important? Well, risk management is the most important topic in trading, or the most important thing that you have to follow in trading. And that's just my opinion. But if you can't manage your risk, you probably will never make money in the market, right? So, you will most likely never, actually, let me correct that. You will most likely never make consistent profits. Like, you'll occasionally get that flip. Everybody has, I would say 90% of people have gotten that flip. Like me personally, I flipped like $10 to like $300, and then I withdrew like $50, and then I blew it, right? This is a long time ago. But the thing is, in that happened because yes, I was making money, but I was risking too much on account. Every trade was 30 to 40, maybe even 60% risk, and I only got like maybe 10. I mean, maybe. Well, obviously, I did flip the account, so I got like 200% back, but it's not wise to risk that much on every trade because, for one, majority of traders do not even have a positive win rate, and two, it's just like, I don't know how I can sit on a screen and be comfortable with risking 30% of my account. So what I do with risk management, I don't do that zero point 0.01 per 100 BS. I don't do any of that 0.1 per 100. All that's BS. How you should manage how you should manage an account for, like, based on risk should be through percentage. Percentage is everything, right? Because percentage coincides with risk to reward, and then with ROI and all that. So if we're talking investment, we're talking ROI, and if we're talking ROI, then we are obviously talking percentage, right? So your goal should be to manage an account based off of percentage risk, right? And what I mean by that, and that means that each trade you should risk 1%, 2%, 3%. Honestly, I wouldn't recommend to do more than 3%, just because if you do 4%, then if you lose 20 trades, your account is almost wiped, right? So the thing here, right? So let's put this into perspective. We're trading a $5,000 account, and our risk here, 1% risk, is $50. We're risking $50 per trade, right? So here's the cool part also about managing risk, and you don't have to do it this way, but you can do it in any type of way that you want. But let's say you lose that first trade, you lose 1%, $50. Your new balance is now $49.50. Okay, but the cool thing about that loss is now you can go reflect obviously to what happened, but now your 1% risk isn't $50, it's now $49.50. So if you're in a losing streak, each trade you're losing less money, right? And that's a good thing, because once you reach a certain amount of losses, obviously you know you're going to stop. But now every loss is less than the initial risk, which is good in my opinion. And that's if you lose a trade. So now let's say you win a trade, all right? Let's say you have a 1 to 10 risk to reward, and you hits TP. Cool, you just made $500, right? Excluding, your charges or your swap or whatever you went through for that. Your balance is now $5,500, right? So when you look at $5,500, right, now your 1% risk is $55 instead of the original 50. So now you're compounding your account properly. Now, since your account is growing, obviously the amount of money you're risking is growing, but the amount of actual percentage that you're risking does not change. It never changes. You have to be consistent with that. So all I ask from here is, it doesn't matter what you risk, 1, 2, 3%, but stay consistent to it. You have to stay consistent to it, because that's how you're going to see that longevity growth, right? Like, for example, let's say this trade was 1 to 20. I just made $1,000. Now my balance is $6,000. So now my 1% risk is $60, right? And if it's increasing every single trade, that's how you properly increase lot size. Your lot size is 100% influenced by your risk to reward and your account size. It's not by, oh, I want to drop this random lot for this trade, and then I want to drop this other lot for this other trade, right? Lot size, it's completely irrelevant, because when you manage your risk, then that's how you essentially get your lot size, okay? And a good little tip for that too is going into Myfxbook. There's a ton of apps for this, but the one that I use is mainly Myfxbook. And we go to Forex calculators, position size calculator. All right, cool. My account size is $5,000. My risk percent is 1. My stop loss, okay, let's say I had a 5 pip stop loss on Euro USD, right? And it's important that you change the currency pair that you're trading to the currency pair that you're actually trading, because each pair, if it doesn't end in USD, then it will have a different price per pip. And that's just because, let's say you're trading Euro odd, then what you're doing is you're changing euros to Australian dollar. So now, in order to get US dollar, you then have to go through the exchange rate of AUD to USD. So you just make sure you always change the currency pair to whatever pair you're trading. And so, see, it gives you your lot size. I would use a 1.0 lot size, right? And so let's say I had 5,500. See, it changes. Well, let's go back to 5,000, and let's say I had a 7 pip stop. So now you see the lot size is smaller. So just take advantage of this, dude. Take advantage of managing your account from a percentage perspective, because that's how you're gonna see the big returns, because people aim for 300%. Let's say you have the best month ever. You had 6 trades. They're all 50 to 1. Best case scenario, right? You just essentially triple the account, maybe even more, off of 6 trades. And if you're trading $5,000, that's $15,000 now. So it's just, you just have to follow risk management, man. And even if you're taking consecutive losses, each loss is smaller because the starting balance is now low. So you can either change your risk every trade or every 10% or just anything about that. But all I ask is that you stay consistent with your method that you're using, right? You can change it after every trade, like I said. I personally do it every 5 to 10%. I change the actual account balance. So yeah, just, you can do whatever you want with it, but just stay consistent to it.